is always pay yourself first. Pay yourself first in a scenario where the moment you can secure 150 pips in your favor, take it to the bank any day. Money is better in your wallet than in the financial markets. So make sure you are trading risk-free and have rewarded yourself by the first 150 pips you have secured on gold. And then the rest, let it be a grace from God.
Yes.
Absolutely. Never give up. In some of everything else, I would say you will experience all manner of highs and lows, all manner of doubts, all manner of challenges. However, if you choose to be true to the exposure, the experience, and the truth of trading, it will reward you. Trading rewards those who survive it, not those who come into it.
If you're in a trade right now, take a pause. If you haven't analyzed the markets, don't move. This might be just what you need. This is the Mind of a Trader podcast, where we cut through the edges, focus on execution, and break down the mindset behind every move. This is where real traders sharpen their edge. I am your host, presenter Ali, and we're about to have an amazing conversation with one and only Quest.Yanga. That is on his Instagram, and he's gonna tell us his Quest is really his real name, because that is a very interesting name. And you guys in the previous video actually commented and said the word class, and I made sure that I bring him to actually break down his strategy step by step. Thank you so much for coming.
You're
really
welcome.
Appreciate you, and
Absolutely.
I want to say I'm really honored to actually have a first-hand experience of this strategy, because this guy, the other day, he just got a Mercedes Benz. This is a strategy that got you this Benz.
Absolutely.
This is a strategy that got you over $50,000.
Absolutely.
Amazing. Let's get into it.
Absolutely.
First, Quest is your real name.
That is my real name on Instagram and also on TikTok.
So
as
it's
well.
not like a name you came up with, for swag and everything.
Hapana, jina yangu kweli, genuine real name.
Wow. Amazing. Let's get into it.
Absolutely.
Yes.
So for those who are interested in trading and all those concerned, my trading style is called MISD. MISD simply stands for market structure, imbalance, supply, and demand. I only use 3 confluences to come up with a bias, direction, and entry.
Wow. Interesting.
Now, my trading style is as mechanical as possible. The reality about trading is that most of the time is we try to put our emotions at play, and that should be the fact that is removed from everything. You should be able to execute a trade as mechanically as possible, following a set criteria of objectives each and every single time. Now, you would find whenever you start trading that a couple of things are very important. First and foremost, do you have direction?
Yes.
Are you able to wake up and see where is a market going?
Yes.
Today, for example, can you clearly observe a market and see, is it moving from point A to point B? What gives us this? This is what we like to call supply and demand.
Wow.
Now, I'll explain the very simplistic concept. Supply and demand is a real world concept where we can easily manipulate the thought process behind everything, any market, real estate, financial markets, even, for example, the physical markets that people sell and buy goods, okay? For example, today, if someone was to sell an asset, for example, even just say onions, and then they were the only person selling the said asset, if they decided to hike the price of it, let's say even 50% more, if they were the only person selling it, we would be forced to buy it from them at all cost, simply because the value of this asset is the only person selling it, okay? Now, how that works is that in any given market, you would observe it and see that the value of that thing would skyrocket.
Yes.
The demand would be extremely high and supply is low. Hence, the value of an asset appreciates. I purely only trade XAUSD. Only gold.
Gold.
Nothing else.
That's a risky move, bro.
Absolutely. However, with a very clear plan.
Yes.
For me personally, I realized that number one, I am adrenaline driven. So currencies work well for me. However, it takes too much time. And I would like to be in the market
For a short period
of time and I'm done. I'm out. Okay? With XAUSD, I won't lie, it has been a painful process, a painful journey to get where I am today. However, one that's extremely worth it, simply because there have been losses, there have been wins, but there have been overall growth.
Yes.
Okay?
Yes.
How describe in such a way that if you focus on analyzing gold on the higher time frames and then simply focus on a lower time frame execution, you are set to go any single day, any day of the week.
Wow.
Let's get into it.
Yes.
Now, this will be our supply area. Okay? And this will be our demand. Now, price action normally would sell from a value of supply, or buy from a point of demand. We cannot predict the initial movement, okay? But we can speculate the retest that price action comes back into it. So what we aim for is this secondary movement that price action does create. If price does move up from the point of supply and retest it, we can capitalize on this move, okay? How can we be able to identify, or why does it make sense to me and you? It makes sense to us because how we can be able to understand is that it's like investors are protecting this level. All right? At all times, they have vested interest to ensure that price action does not go above this level.
Yes.
Okay? And at the point of demand, it's such a way that when price action comes down to it, the same, just inversely. Okay? Price would buy. We cannot predict the initial momentum. However, we can be able to predict the retest of it.
Wow.
Yeah. This will give us what we like to call bias. This on its own can give us the bias. What the bias tells me and you is that where is market moving and where is it coming from?
Yes.
Okay? Now, this can be broken down in a variety of ways. However, the most simplistic way I like to talk about is one we all commonly know, top-down analysis. Okay? We handle this in a way that we handle the daily, 4-hour, 1 hour, and then we come to the 15 minutes and 3 minutes.
Yes.
Okay? Now, this is purely for analysis. And this is purely for
Execution.
entry and execution.
Wow. Interesting.
How this will be of value to you is that on the daily time frame, you will to identify the key areas of interest. Where is price action reacting from? Or is it heading to? Same on the 4-hour, same on the 1 hour. They should be able to give you a very clean confluence if they all align with each other. Then you simply come down to the 15-minute and the 3 minutes to look for an entry or an execution. I've briefly spoken about supply and demand. Let's get into what I like to call market structure.
Market structure.
Okay?
Okay. Amazing. Let's go.
Now, if the supply and demand is the where, market structure is the how. Okay? Market structure works in such a way that when the market is moving from either a bullish momentum or a bearish momentum, our work is to identify what is exactly causing this price action to be able to move from said areas. All right? Now, I'm sure we've all been interacting with trading to a point we know that price buys from an area of interest a strong low. Okay? And then it forms a new high and then forms what we like to call a break of structure. Okay? This continuation is what we capitalize on if we have a bullish momentum. For those who have been trading gold for the past, before this week and last week, this same pattern has been playing out over and over again.
Yes.
So one may ask...
Today we actually had this.
Exactly. Today we just had this exact opposite.
Yes.
One might ask, how can me and you be able to identify these points which we market aggressively buys from in a bullish momentum?
Yes.
I'm glad you asked. That's why the first confluence came into play. Supply and demand is a concept that teaches us where the market is coming from, where it's heading into.
Yes.
Now, one other concept is that if supply and demand fails, its inverse presents us with an entry point. A good example is that if this was a previous point of supply that failed, if we highlight this area, we can expect price action to come and it will become our new demand. Yes.
Okay.
And that is how we're able to have very tight and very precise entries in a bullish market. Because buying at said areas, for example, this area right here and this area right here, you would be with the trend, but you would be unprofitable because whatever your position immediately get into drawdown before becoming profitable. And depending on how your risk management is, it can be very, very aggressively bad for you.
Yes.
Okay? So, you look for market structure such a way that you draw your highs and lows. Very simple. Your lows, your highs. Your lows, your highs. Your lows, your highs. Now, assuming all this had not happened, How can me and you be able to predict or speculate this beforehand? Very simplistic. Highlight the previous area of supply here that failed and wait patiently for price action to come back into it and tap. Highlight the same area, wait for price action to come back into it and tap. How do you take a trade? You have your entry in this area, your stop loss simply beneath the low, and your target area at the previously formed high. Okay? So in such a market, you have how many potential trades? 1, 2, 3. That is market structure explained in a bullish market.
Okay.
Yes.
Interesting. I hope you guys are getting this. And as I normally say, if you don't understand it, just scroll back and come again. We have to make sure that we get the money from this market. Let's continue.
Absolutely.
Yes.
Now, we understand the market can never move in upward or down direction forever. What do we do when the market decides to change direction, like today on gold? Very clearly. In the scenario you were in this buy position and it did hit your target and you decided to take another buy position, you would not have taken a position because, number one, it would not have respected your previous area, okay? At this point, it would have violated it. Now, once you see something like this and then it comes and breaks beneath the previous low, what we all call this is a change of character, okay? This immediately notifies you that the price action has changed from being bullish to bearish, okay?
Yes.
You now draw the exact same structure, however inverted. Your focus is no longer on the lows, but now on the highs. So this becomes your strong high, it becomes your strong high, your strong high, it becomes your strong high, your low, your low, your low. Now, upon identifying these areas, how can you use them profitably beforehand? Okay? Remember, this was your previous area of demand at the change of character, which price action came and aggressively bought from. However, it failed because price action came and closed beneath it.
Broke it, yeah.
Exactly. This becomes your new point of supply, in which you now enter at this region targeting the previously formed low. And the same pattern continues. Your new point of, this was new failed demand right here, price comes back up, you enter here, targeting the previously formed lows. Again here, you enter here, targeting the previously formed lows. So realistically, what you're looking for is that this trading style, remember, it's called MISD, only targets continuation, never reversals. Because again, you always want to be with the trend, never against it. Okay? Now, in the scenario you have a bearish market in this opportunity, you'd again have 3 selling opportunities. Okay, you'd have not identified this because it's almost not, it is actually impossible unless you have pre-information ahead of fundamental data to identify the initial drop in price action. But when you identify the previous highs based on the previous point of demand, it becomes a new point of supply. You can capitalize on that, targeting the previously formed lows like this, like this, like this, like this.
Wow.
Okay? Now, this has given you what we like to call structure, which basically answers the how.
Yes.
Remember, we started with bias. Bias answers the where.
Where?
Structure answers the how. Okay?
Bias.
The where.
Hope you guys can read this.
Absolutely.
The best handwriting in the world.
Don't worry. That's me and you both.
Yeah.
Now, I want us to get into the most important thing, which answers the when. Okay? So, bias has told us, for example, if this happens to be a strong low, which we have identified through supply and demand, that is our demand area, the price is buying from. And this, for example, happens to be a supply area where price is selling from. We have the where. Price is buying from where? This area of demand, right here. Price is selling from where? This point of supply, right here. Okay, this is an example of a financial chart, all right? Now, the how is it buying? By breaking highs and lows. Breaking highs and forming lows. Break of structure, continuation, break of structure, continuation. One thing I'll advise people is whenever you have a break of structure, most people see a bullish market and see a very aggressive bull and think, I am missing out. I really want to capitalize on this. You fail to understand that if you decide to capitalize on this, if FOMO takes the better of you, you would end result in a loss. After every break of structure, expect a pullback. Okay? So be very patient enough to wait for price action to come to these areas. Now, when it comes to the when, we'll introduce the last concept, the I. We've talked about supply and demand. We've talked about market structure. Let's talk about imbalance. Okay.
This is very interesting, and I hope you guys are getting what he's saying and learning from this, because this is also one of the simplest strategies that you could see anywhere on the internet and in all those trading books.
Absolutely.
So he's going to break it down in just a few minutes, and you have to understand it. And as always, we say, if you don't get it, go back, move forward with us. Let's go.
Absolutely. Now, the last but not least is what I like to call market imbalances. Now, what are they and why are they important to me and you? They're important simply because in any financial market, we're always going to have buyers and sellers. There'll never be a situation where one overpowers the other or one is purely the most dominant aspect. So if we have a scenario where we have a financial market, for example, that is aggressively bullish, okay? And then in this area, it leaves us with only buyers in this area. Let me use candlesticks to explain for this, okay? A candlestick will look something like this. Now, this is a market that's aggressively buying. In this area, there have been no wicks, there have been no price movement of any selling pressure at this point. What this leaves, it leaves us with a gap or an imbalance.
Yes.
Okay? Now, this presents me and you with the best entry to take a trade. Okay? What you wait for is for price action to simply come, tap this region, and then engulf it, close above it. The moment you see price has engulfed it, let me draw a good example.
You can use the other
The other
color.
pen, actually.
So this is the candle that is coming down.
Exactly.
Okay. Let me just, this is a red one.
This is a red candle.
This is a red candle,
This is a blue one.
right? And this is a blue.
Yeah. It's a blue one.
Interesting.
Now, remember, this is the market. This market is bullish. Okay? And what are we looking for? The moment you see an aggressive blue candle that has closed in this manner from an imbalance, this highlights to me and you that number one, buyers enter the market aggressively. So we are safe with the initial speculation we had beforehand. So we take a trade, buy position at this point, and then we put our stop loss at just beneath the imbalance. What do you target? You come back to market structure and you target the previously formed high.
Wow.
Yes.
So what time frame are we looking at here?
This is we're looking at the 15 and 3 minute.
And 3 minutes time frame.
Okay.
Interesting.
Now, one may ask me, what happens if you don't get this? Because this is the picture
It's like
perfect.
perfect, yeah.
Exactly. If you get a scenario where you have price action just giving you sloppy momentum and just has candles that move like this, one that move like this, another one that just not really good aggressive price action. You just wait and you depend on candle closure. If candle closes above, this momentum is still valid.
Yes.
However, if in a scenario where the sell candle is bigger than the buy candle, you do not take the trade.
Yes.
Because number one, you don't have guarantee of bullish momentum. In this case, it means the buyers try to enter the market, but they're still overpowered by sellers.
Yes.
Okay, and this entry model applied on a selling pressure is exactly the same.
And that's why this candle, for it to play out, it has to engulf this.
Exactly. Because this gives you the green light to aggressively enter the market, having the surety that you are in line with the momentum of the market.
Okay. So there are situations, of course, where the candle would tap. Okay. There are situations where the candle would get in, and there are situations where the candle would
Violate.
go past it.
Exactly.
So how does it play out?
Now, that plays on a very simplistic way. Those three situations are handled in this concept. There's a situation where the area is mitigated, when it is filled, and violated. Now, in the first two scenarios, if the candle is mitigated or filled, you take the trade. However, if the candle goes past the region and closes below it, don't take the trade.
Interesting.
So in this trading style, each and every action you take is as mechanical as possible. You have no room left for if, buts, or maybes. You are completely mechanizing your trading style to a point where it has to make sense mechanically.
So if the price taps, take the trade.
Take the trade.
If the price goes in,
Fails, take the trade.
if the price closes below
Don't take
the
the
gap, don't take the trade.
Remember, all this is depending on candle closure.
Yes.
So at no point are we just waiting for price action to reach it. If the price taps and then closes above, take the trade. If the price comes, closes inside and then closes above, still take the trade. If the price comes, violates and closes below, don't take the trade.
Yeah, and there are other instances where maybe it's good to mention where this candle will open this big, and some people will say it's already engulfed. Let's go in. You have, for example, if you're looking for the 3-minute time frame, you have to wait for the candle to close because sometimes it will just come up here
And then still go
then
back
it will
down.
close somewhere there.
Absolutely.
So you just have to wait.
Absolutely.
Yeah, interesting. Per se, I would say we're using the same strategy.
Absolutely.
And that is very interesting. Now let's look at you're using 4 hour for the top down analysis for getting the direction of the market. You're using the 15 minutes to get
The entry
the
area.
entry area and 3 minutes to get the precise entry.
Exactly.
And your indication of an entry is the engulfing.
Exactly.
Wow. That's simple.
That is simple.
And you would do the same for a bullish market.
For the bearish market.
I mean, for a bearish market.
Absolutely.
Let's look at an instance.
Let's have a look at that.
I hope you guys are learning, and because this is one of the simplest ever strategies that you'll see in the market that got this guy actually a Mercedes Benz less than 2 weeks ago.
That's what we just said yesterday.
Yesterday. Bro, that is crazy.
Absolutely.
Let's go.
Now, in a bearish market, things do not change. Everything remains the same. Okay? You'd have price action moving in this aspect where, number one, remember, you are trading from an area of strong structure where you're either referring to point of supply. The point of supply, you cannot be able to tell the initial movement. You wait for price action to form the initial momentum and then come back up to it and then identify it.
Yes.
Now, you come to market structure and you're able to identify highs and lows. Okay? Highs and lows. Draw a little bit like this. Highs and lows. Now, with market structure, it works in this aspect. Highs have been broken, lows have been broken, and it's forming continuous lower lows and lower highs. So you highlight these key areas as potential entry points and potential trades. Now you come to market imbalance and wait for the exact same thing. You highlight 3 candles. And what do you wait for? Once upon highlighting them, wait for the exact same thing. Price action will continue. However, it will eventually come back to this area that you can capitalize on using the entry area. We talked about 3 scenarios. You have it being filled,
Mitigated
or
violated.
Exactly. Or
Violated. But before we continue, maybe it's important to mention that the body of this candle and the wick should not overlap.
Exactly.
So if we have something like this or something like this,
Invalidated.
thank you.
Exactly. You're only looking for pure body. No wicks or candle, no wicks should be involved. Pure body. Exactly.
And even if they have wicks,
Very small.
let them
Don't
not
overlap.
overlap.
Exactly. So you can able to cleanly highlight this area. Like this.
Nice.
Now, same thing. Price action should come back into it and close. Okay? Close below the area. The moment you see kind of closure below the area, you have the green light to take the sell trade.
Yes.
Yeah.
If it goes above,
Don't take the trade.
it goes inside,
And closes below, take the
take
trade.
the trade.
Exactly.
Nice.
Absolutely.
It's that simple.
And this entry model, this is my complete, accurate entry model that will give you. I don't want to speak about 100% win rate because, but
There are many things
there are
like
many
spoofing,
factors.
you know.
Exactly. However, if you stick to this as mechanically as possible, you'll find trading to be the most enjoyable thing you ever interact with yourself with. Simply because number one, everything you do makes sense, and everything you do is purely based on structure and purely based on mechanical trading. Yeah.
Interesting. So, we're going to get into the charts now. We see how this plays out.
I will recap the trades we have taken for the past 2 weeks, simply because we trade in less is more. Less is more as you believe in less quantity, more quality trades. Okay? Now, we begin analysis by having a look on the higher time frame. Okay? What this gives me and you gives us a look into what you can expect for days to come. So currently, the key point of interest I want us to put our focus on at the moment is having a look at this daily imbalance here. Okay? Let me highlight it a little bit. Now, why is this important? This is important because this is the key point of interest where we have expected price action to come and react with. Okay? Now, at this point, what me and you can expect is one of two things. We can expect price action to either respect it or violate it.
Yes.
Now, that will depend on a quick second. Let me just add the middle line. Yeah. We then come to the 4-hour time frame and we look for similar structure. Okay? On the 4-hour time frame, when you expand a little bit, what you come to see is it does not have an imbalance in the same area. Okay? So there's an imbalance on the daily, but not on the 4-hour. Let's come back down to the 1 hour. At the same region we've highlighted. On the 1 hour, we come and see there is no imbalance like that. So we do not have clean confluence between all the three biases. So I will not be biased to take a buy trade in this position. Okay? What I will be looking at is a continuation of the previous momentum. Let's have a look at how we came with the previous momentum of selling pressure since the week began. Now, we had market opening at this point.
Yes.
On the daily time frame at this point. The market just opened with a gap. So we came to the 4-hour time frame, and on the 4-hour time frame, you were able to highlight this as our point of supply. Okay? Our point of supply being the area that caused aggressive selling pressure.
Yes.
Okay? Now, price action immediately rejected it, came back up to retest it. Okay? This gives you a bias of where you expect price to head into, to react from. Now, when it comes to an entry point, when you come back down to the 1-hour time frame, you will realize that price action not only reacted with the area once, but actually 3 times. Okay? At this area right here. So this gives you information that you can expect bearish momentum to dominate.
Yes.
Now, when it comes to identifying an entry, as we discussed, the 15-minute is very crucial, okay? Because once market opened, for those who were awake at those time, you realize the market opened with an aggressive gap of almost 300 pips down, okay? From around 41.09 all the way till 40.62.
Yes.
Now, what this tells you is that this is basically a market imbalance being left, all right? And price action came back up to fill it and then had continuation of it. We can see a more precise explanation of this on the 3 minutes. That is very important to have an outlook both on the 15-minute and on the 3-minute. On the 3-minute time frame, what you can expect to see is the same thing on the 15-minute, but a bit more accurate with more precise entries. Let's have a look back to the Monday here. Exactly.
Nice.
Very clean and very, very important imbalance. Now, as we discussed, the market left the imbalance and then price came
For it.
came back into it. Now, it did not engulf as the first entry scenario you're expecting, the first entry model. However, it did close below. The moment it closed below, you take the trade and you have your stop loss at the previously formed high at this point, and then your target previously formed low. And that is, however, let me teach you something. On the previously formed low, in this aspect, you do not look at the previously formed low on the 3-minute time frame. You look on the previously formed low on the 1 hour, 4 hour, and daily time frame. If that is a really precise entry on the 3-minute time frame, what we're looking at our targets on the 4-hour time frame are way more expanded in this insight. We're looking at our targets being 4,000.
Okay.
And our entry model was at around 4,100. That is clean, almost 900 pips in our favor. So you have a very minimal risk with a very expounded or very accelerated target area. However, it does fall in line. Okay, that's where you find yourself with low risk, high reward trades. Okay.
Wow. I hear you.
Absolutely.
I hear you. So per se, we would say our TP1 would be here,
Actually,
TP2,
our
and TP3.
exactly our TP1 actually would be here
Yes.
at 4,058. TP2 would be here at 4,000, and then TP3 at this level down here.
Yes.
Exactly. However, with trading gold, one way I would advise everyone is always pay yourself first. Pay yourself first in a scenario where the moment you can secure 150 pips in your favor, take it to the bank any day. Money is better in your wallet than in the financial markets. So make sure you are trading risk-free and have rewarded yourself by the first 150 pips you ever secured on a gold. And then the rest, let it be a grace from God.
Yes.
Absolutely.
How I normally do it is I would close partially,
Exactly.
but I would do something like
Certain break
60%, 70%, not even like, you know how to close the trades
Exactly.
on MT5.
Exactly.
Like you just, if you had like 2 lots in, just close and just leave like the 0.5 to roam around, or
Absolutely.
0.05.
Absolutely.
Because sometimes the market will reverse on you and you are in
Absolutely.
extremely good profits, and
it's very
anything
painful.
can happen in the
Very
market.
true.
So I think that is in order. But what I love about this is how you've been able to break it down and enable people to see. Do you have any other instance that maybe we can use
Absolutely.
for, let's say, for a bullish market?
For a bullish market. Now, for a bullish market, for those who have been interacting with me, we have been buying gold ever since the days of 2,500 because of the same criteria we've been talking about. Let me bring you back to this area right here. Now, this was the most pristine buy entry we took with our community at this point. You saw a market imbalance on the daily time frame. Okay? At this point, price action came back down and tapped it at 31.62. You come back down to the 4-hour time frame. What are you looking for? The same criteria, same thing in this aspect. At this point,
Nice.
you see? Now, for a bullish scenario, you realize market imbalances offer the most, I would say, accurate entry points you could use. That you see that price action came and engulfed, came and tapped at the 4-hour imbalance. You come back down to the 1 hour and you look for the exact same thing. Okay? Hence the reason why when I told you we apply top analysis across the board from daily, 4 and 1 hour, they must all coincide. If one of them misses, that reduces the accuracy of the trade. Okay? Now, when we come down to the 1 hour time frame, the scenario is the exact same thing we talked about. The same as the 4 hour we analyze, the same as the daily we analyze, all within the agreed time frame. Let's have a look at how it looks. Exactly.
Interesting.
Yeah. So when you expound this and you have a look at it, what you can come to realize is that this same area that you're waiting for on the 4 hour, on the daily, there's also a 1 hour gap that has been drawn within it. Now, at this exact point, now when price action comes and taps it, you do not simply go ahead and buy like a full throttle on. You wait and have a look at the 15 and the 3-minute time frame for the exact entry model we talked about.
Yes.
A good example is this. Let's highlight 15. It takes a bit of time to load.
Oh, it's because it's a few days ago.
Yeah, it's a few days ago. However, let me even highlight a more recent scenario that happened just today. Here's the most recent scenario. Remember, we're in a daily time frame at the moment. Like we are trading from a daily imbalance as you're speaking, as this video is being recorded. So here we have what you like to call a nice imbalance. And price action has come, tapped it on the 5-minute, and has engulfed. The moment price action engulfs, you take the trade here. You take the buy position there. You have your stop loss just at the previously formed low, around that point. You target the previously formed high. However, you don't target the previously formed high of the 5, you target of the 15. And that gives you...
It's a good risk to reward.
Exactly. And at the moment...
1:4.
Exactly. The trade is still currently running as you're speaking about this. So, by end of day, we'll have a look and see how will this trade perform. However, my speculation is that we might take out or we might reach this level before we continue going down. Okay? However, gold is an asset that you not only trade purely based on technical analysis, you also must have a firm grip on fundamental data. We have very important news coming in the very near future regarding tariff announcement in China and US, regarding also the Fed's policy on interest rates, and that will heavily influence how we trade gold.
Yes.
So now we should be aware, however, the next coming months will be extremely profitable. Absolutely.
Wow. So gold has hit a very has gone down actually today.
Yes.
And the buyers suffered today
Heavily.
And what are the projections we're looking at for you per se when it comes to gold? Would you say we're looking at gold going lower to around 35 or going back to around 43, 44?
We're currently in a very interesting point, both technically and fundamentally. That interesting point is being, we're currently in the level that gold broke, that 4,000 region. If price action closes above 2,900 and stays there and continues going up, we are very likely to take out 4,300 and hit 4,500. However, my speculation is if price action does continue breaking below this level, we might be heading down to 3,500 levels before we have another aggressive bull run. However, in the long run, there is nothing but bullish momentum to be expected from gold.
In the long run?
In the long run.
Yes.
By next year, Q3, Q4, we'll be talking about gold in 7,000, 8,000 levels.
Yes.
And that's something we'll all lay witness to.
Yes.
Absolutely.
And funny thing is, some of us have witnessed gold being at 1,900, 2,500.
Yes.
And people never bought.
Yes. And yet again, the people who will witness this being at 4,000 and not buy before it reaches 10,000.
Wow.
Yeah.
So take it from us. Gold right now has gone down. Next year, 2026, 2027, we could be looking at 8,000, 9,000.
Absolutely.
So the decision is up to you.
Absolutely.
Yeah. So
people can decide to capitalize on this.
The major question that I ask is, how long did it take for you to grasp this and master it?
It took me well 2 years.
2 years. 2 years.
Yes.
And when you're looking at maybe your students or your mentees, how long does it take them to get the basics of it?
Less than 2 months.
Because you give them now the crucial information. that they couldn't get?
As a very close friend of mine said, we are not just teachers, we are mentors. Mentors in essence, where we make sure you learn something to the extent that you can be comfortable enough to replicate it day in and day out. This is something I only purely trade gold. It's something that I have been exposing myself to for 3 years on end aggressively, through losses, through wins, to the first bull run of 2,500 to 3,000, the second bull run of 3,500 to 4,000, and the next bull run that's coming up. So it's a reality of now, when we are learning, for those who will be available in our mentorship classes, also for those who will copy my trades, it's something where I take you step by step, every execution, every entry with reason and precision.
Wow.
Yeah.
So how do people reach you?
People can reach me through Instagram. People can reach me through my official phone number and my social media pages. I also have copy trading available for all those who would be interested in copying my trades as free as possible.
Okay, that's amazing. So I'm gonna pin his number, his social media platforms. Reach out to him, talk to him. Just tell him you're sent by Presenter Ali, and he's gonna assist you in the best way possible. Whether it's mentorship, copy trading, and of course, anything else.
Absolutely.
Yes, even for the ladies who wanna come and say, I'm just kidding, guys. I'm just kidding. Anyway, anyone, if you wanna just say hi to him, follow him on Instagram. You know, follow his content and everything. I'm gonna pin his his link in the comment section. I do appreciate you for the time.
Very welcome.
Give us one last question. The win rate for this?
Win it for this, well over 70%.
Over 70.
Yes.
Do you give it 75?
Even approaching 80. Data driven.
Let's say 80%.
Yes.
Wow, amazing. Thank you so much. Really appreciate your time.
Absolutely.
Last question of the day. The biggest trading advice you'd ever give to anyone who's watching right now?
Never give up. In some of everything else, I would say you will experience all manner of highs and lows, all manner of doubts, all manner of challenges. However, if you choose to be true to the exposure, the experience, and the truth of trading, it will reward you. Trading rewards those who survive it, not those who come into it. Absolutely.
Wow. Thank you so much. Closing this right now. Hope you've learned, hope you've understood. If you haven't, go back, come again. The video will always be here for you guys. I said one thing, we must crack the market. This has been the Mind of a Trader podcast. I am your host, Presenter Ali, and I'll see you guys in the next video. Behind the camera, we have my guy, Bishop. See you guys.